All right, welcome back to Stock Tricks with Nick for this week's trading recap from June 14th to June 18th. Obviously, this is not fun for me, but I'm always 100% transparent with you guys, so I share my winners. This week was a losing week, down $1,200 or 2.8% on the account. Started off Monday really hot, up $800 early on in the morning, and then just got chopped up. The rotation, Fed meeting, quad witching, all that good stuff working against me. And I went from like 90%, 100% invested all the way down to 25, built up a couple positions at the end of the day, Friday, but tough trading week, tough environment. So 100% transparent. Let's go over all the mistakes that I made, some of the good things that I did, and how the market's reacting. If you enjoy the video, please leave a like on the video, subscribe to the channel. I make this trading recap after the week is over. I put out a breakout watch list on Sunday morning and then another midweek movers watch list either on Tuesday night or Wednesday night, depending on how the market is shaking out. Give me a follow on StockTwits, Twitter, TikTok, Instagram, and Facebook at Stock Tricks with Nick on all those platforms except for Twitter. It's Stock Trick Nick there. If you're coming here for a specific stock, I'll put the timestamps of each of the stocks that we talk about in the comments section below. Here are the notable winners and losers of the full closed positions that I've traded. Closed out on a couple winning trades, but as they slid back with CYH, TDUP, CLF, didn't close any of those at the high, which is, I mean, you're never going to close it at the exact high, but really closed those short after they're pulled back to my stop loss. And then some of these losses unfortunately happened as I was really increasing position size, trying to get aggressive because everything was working for the last 2 weeks. Everything was working Monday morning, and I got hit in the face. So tough week. In this video, I'm going to cover a market recap, go quickly over the Tik Tok Trading Challenge week 24, review both the breakout watch list that I put out on Sunday morning and then the midweek movers I put out on Wednesday, show you my open portfolio, and go over some past trades. Quick disclaimer, anything that I talk about is not financial advice. It's not stock advice. This is for educational purposes only. Please do your own due diligence before trading. Trading comes with financial risk. All right, quick look at the market. I talked about rotation earlier. We're really getting a lot of rotation. You can see S&P 500 down 2.2, Dow Jones down 3.5, both of which have slipped under their 50-day moving averages now, while the QQQs on Thursday just rocketed higher. Really, I think they were up 1.7% or so. We'll take a look at the chart in a second here, but up 0.4%. So really good strength in tech, as that's kind of where the hot hand has gone Thursday and Friday. But I mean, it's been a tricky environment. Everything is up one day and then it's pulling back while the money's flowing to another group. So you got to be really quick to take some profits, move stops up, and really not try to swing for the fences in this environment. You see IWO that tracks the growth stocks that I typically trade, down 2.7% today, or 2.7% down this week. I was down 2.8, so it outperformed me a little bit, but I mean that's really what I'm looking to compare myself to, and unfortunately down 0.1% against that this week. I mentioned the Fed meeting came out, talked about inflation, talked about interest rates rising in 2023. The quad witching on Friday today, just more volatility in the market. It's going to throw off a lot of the volume on the charts. So when I do the breakout watch list on Sunday, I have to kind of remind myself, hey, don't look at Friday's volume. That's going to throw off and lead to some like red flags or maybe too positive of a setup, depending on the volume there. And just wanted to mention, as a breakout trader, I'm buying the break of these pivot points that we'll be covering, and a lot of the pivots, once it got over that, immediately sold off this week. So basically the worst type of environment for my strategy, and when that happens, I try to get smaller, and take profits a little bit quicker. So let's take a look at each of these indexes. So we have S&P 500 down 1.35% today. Yeah, first time it's been under and closed under that 50-day moving average. It's now under this volume shelf. There's a huge volume gap in here as kind of March, we just kind of gapped twice here and then ran up and then started to build a base out here. So this is definitely a warning sign right here. Closed at near the low of the day. Actually, this might be reflecting the after hours as well, but still down 1.35%, under that volume gap, under the 50-day moving average, or under the volume support, and now looking to gap. So, I mean, next true support is another 4.5% down. So we're gonna be cautious. Also, under the 50-day moving average now is the Dow Jones. Look at this. This just fell off. It looked like it was starting to turn over. It held up one day at the 20-day moving average, then undercut that. The next day was under the 50-day, and then just followed through and followed through. This looks really gross, which it doesn't typically hit the stocks that I'm trading, but because we're getting that sector rotation so quickly, I had been in some names that weren't tech. So when tech got all the money and sucked out all the money from the other positions, I got stopped out of that. Didn't really have time to put on some tech positions and got hit. But this looks dangerous for sure. But now let's go to the QQQs, where it's telling a completely different story. We're nearly at all-time highs now, where that was flipped in March and in May when this was flowing down. S&P 500 was hitting new all-time highs. So now the story has turned around. Hopefully that's good for growth stocks, and I just have to kind of give it a week for some pivots to set up and reestablish myself. But S&P 500 looked bad. Dow Jones looked bad. This down 0.8% today on Friday, closed above the 8-day exponential moving average. Great volume on Thursday, closing at the high or near the high of the day, and really looked like it was ready to break out. So we'll see. Tough environment. IWO next. This is the Russell 2000 Growth ETF. And you can see this had finally broken out over the 50-day moving average. I was starting to get aggressive. We were getting this nice trend, had a quick check back day, and then started looking really good. But since that Monday, we opened, pushed higher. I was up $800 early in the morning, and then since then just reversed and sucked the rest of the week down to the 50-day, down the 20-day moving average, and right at the bottom of this volume shelf. So is this something where it's just pulling back to the moving averages and then going to check higher? That would be great. We're all rooting for that on the long side, but until we get a move over the main part of the volume shelf, I'm going to stay pretty defensive. So I didn't mean to talk too much about the market outlook, but it's something that we got to be prepared for. Super quick, Tik Tok Trading Challenge down this week 1.5%. We had Shopify out there on the 4 that you guys could pick, up 17, 18%. Unfortunately, 43% of the vote went to ZIM, and that's unfortunate for me too, because I didn't trade Shop. I did trade ZIM, Crocs, and FOUR. So I guess we're both losers this week. I'm up 4% on the year now. I was down 2.8% this week, and the Tik Tok Trading Challenge just not going well because those growth stocks really took a hit in February and March. So all the money that I make on TikTok, I put into a trading account and let you guys vote from the Breakout Watchlist how we're going to invest that money week to week. So Sunday, tune into the Breakout Watchlist, vote on your favorite setup, and hopefully we can start turning this around. At the end of the year, if this account beats my own on a weekly compounding basis, I'll be giving away the entire account to a random commenter who leaves their TikTok or Twitter handle in the comment section of this video. Not this video, but the video that I'm linking up here, the original TikTok Trading Challenge video. That link is also in the description of this video. All right, let's go over Sunday's breakout watch list. 30% win rate. See, we had 2 weeks back-to-back, 75%, 75%. This week, 30% win rate, 6 winners, 14 losers. Average gain-loss was a loss of 2.2%. Compared to the market, that's right on the S&P 500, better than Dow Jones, better than IWO, which, I mean, I'll take that for a watch list. We did find Shopify, HEBS up 14%, but large losses. We have TMST, that's with steel, and I was in CLF, so that got sold off as well. MVIS, we'll go over in a second, and ZIM down 9%. So not an ideal watch list, and this reflects the market that we saw this week. So let me jump to that. We'll go over a couple of these names. Shopify, that was the real winner this week, and it got going right at the start on Monday and just did not stop. So zooming out, we saw this kind of tightening pattern through here, and we said a break over the high from June 8th would be a possible buy point. You had that setup day last Friday as well, basically the same price. We opened just below that, took that out. I didn't put the trade on. Should have, obviously, in hindsight, put it on because it got going up 18%, 19% at the high, and tons of volume on this breakout. Not me and you buying, that's institutions buying. So good to see this come out. Now I got to be patient, wait for a pullback, let it coil up something like we saw down here, and then try to buy some follow through. So that was Shopify, the best from the breakout watch list this week. Let's go ZIM. This is one that was on the Tik Tok Trading Challenge that you guys could vote on. This is one that I was in personally, bought on Friday of the previous week, and then instantly on Monday and Tuesday, we pulled down 11%. That stopped me out. Got a little consolidation day on Wednesday before continuing lower highs, lower lows on Friday. This is one that, I mean, it's been a monster. Let's see, what did it, from the IPO open? So it had run up 300% from IPO open. Looked like we were finally, there's this inside candle, red day right here on lower volume. I guess it's a green day, but red candle on lower volume. That set up the breakout on Friday. That's when I got in, and then just talking about those pivots getting destroyed. That's exactly what I'm talking about with ZIM. And MVIS, this is one that wasn't my traditional setup. It was a high short interest name with very, very dead volume on the pullback days. So that's what caught my eye. We kind of drilled down to a thinner time frame, and still these pullback days are very, very light compared to the breakout days. So maybe one to keep an eye out for, but we're bouncing at the 20-day moving average. We have this volume shelf up here, so maybe we get a 8% bounce until we hit some resistance, some traders that got trapped up here or through here. Not going to put it on the watch list again next week. Needs some time. All right, so that was the breakout watch list on Sunday. Midweek movers that I put out on Wednesday night. Didn't find too many setups. Of the 12 stocks, I had another 25% win rate, 3 winners, 9 losers. Average gain loss minus 1.7%. Again, that was right in line with S&P 500, beat the Dow Jones, got beaten by Nasdaq. Tech was strong Thursday, Friday. And best gain 5.3 by PAVM, and then MRO down 8%, OVV down 9.5% since Wednesday's close. Quick look at my current positions. I was at 80% invested going into this week. I worked myself up to 105% or so invested on Monday when everything was up Monday morning, and then constantly just got chopped out of a lot of positions, went all the way down to 22% invested, and then put some positions on Friday at the end of the day. So now I'm 42% net long, have 12 positions on, but they're all under 6% of my portfolio. No very high conviction because everything's too choppy. Whenever something starts working, breaks over a pivot, it immediately gets sold off. Anything that's coming out on good volume is coming all the way back on dead volume, but coming back all the way to your stop loss. And that's not an environment that you want to be an aggressive trader in. So I'm just going to be taking it nice and easy and really demand perfection from any new trades that I put on. But let's take a look at a couple of these stocks, FOUR SE and HIMX. So first we have FOUR. This is one that I had traded earlier on in the week, got stopped out, and then put it on Friday again because it keeps flirting with the $100 century mark. It's a high short interest name, so that has been in style the last couple weeks. So on Monday here, when we broke over the high, broke over 100, that was my buy point, got in, boom, pivot destroyed, immediately reversed, stopped me out for a big loss. Then we consolidated at the 8-day exponential moving average, had 2 days right around 100. And then today, when it broke 100, I got in. And since then, it's squatted again, so I'm down on the name again. Still have some room before my stop. My stop's at like 95. I think it's 95 flat. Yeah, 95 flat. So that's under the 20-day moving average, under the lower of the pullback here. It still looks like a quality setup. I wish I didn't take it today because it's squatted. It'll probably be a better trade on Monday. Probably gonna have this on the breakout watch list again. And this is me getting stopped out, taking a loss on a trade, but not letting that emotionally affect me, because when the trade sets up again, I want to be involved because it's a quality setup, high short interest, right around that 100 mark. Usually breaking that barrier is a psychological barrier for a larger move. This is SE, got in, where did I get in? Right through here on this green day where we undercut the lows, got out on high volume over the pivot point, bought in there, traded sideways for basically a week or so, then started trending higher. We pulled back, had this nice flush on Tuesday, didn't hit my stop, thankfully, closed above the 8-day exponential moving average, and then since then it's been really strong. One of the stronger names in tech, one of the stronger names of the 2020 names that got so aggressively sold off in March and May. This is right at all-time highs now, so that's great to see. Definitely in a leader with this one. HIMX, this is one that I was celebrating on Twitter, Stock Trick Nick there. Tons of volume coming out on Monday. I had this at a lower break, a break of a lower pivot here on this day, June 4th. Got out on good volume the next day as well, flagged out, boom, got out on Monday, tons of volume, and then the next day just checked all the way back on lower volume. I got follow through below the 8-day exponential moving average on Tuesday. I sold some into strength on Wednesday when we bounced, and now my stop's a little bit above even. I think it's at the low of this day on Tuesday with the rest of my shares. Thankfully I was taking some off here, took some off into strength, took some on a bounce, so it's not a full position anymore. But this is one that looked so good, and then the market just gave it up. So like I'm saying, choppy market, not an ideal market to try to hold on to winners for too long. So one last look at my current portfolio, and here are the top winners and losing completed trades of mine. I did a lot of trading this week because I was getting stopped out with all that rotation and putting on new trades. We'll go over a couple of these, but really what I'm seeing here is I need to go back on defense. The last 5 trades, I think only 4 have worked for winners. So when that happens, when your win rate drops under 40%, drops under 50%, it's time to start playing defense again. I'm more than 10% off my account balance high. So instead of 10% position sizes, I'm back down to 5% of my account. I'm going to require kind of the perfect setup to get in. I don't want too volatile of stocks going into a breakout. I want a nice and quiet volume, price, everything contracting before a quality breakout. And then once I'm in a stock, I'm going to be very aggressive with my risk management. Take maybe 20%, 30% off at one time my risk. So if my stop's 5% below my entry, if I'm up 5% on a trade, I'll take 30% off, another 30% at 10%, twice my risk, and then maybe all at 15 until I can really get some traction and some winning trades, breakout, hold, and really push 15, 20, 25%. Some trades will have to go without me before I get confidence in this market again. So smaller sizes, really perfect setups only, and aggressively protecting your entry point once you get out 1 risk or 2 risk multiples. Let's go over a couple of these trades just to kind of put in mind what I was thinking. We just covered ZIM, so we'll cover, let's cover Palantir instead. So TDUP, this one was so frustrating, and it absolutely shows what this environment's like. This was on a breakout watch list twice in a row, was on this week's as well. Had this cup handle, this is an IPO, and right through here was when I bought, had the high of the day on June 3rd, 24.75. That's when I bought it. Coming through that with momentum on June 8th, immediately started working. So closed 7% up from my entry point on the day. That's exactly what you want to see. You want to see strong stocks that immediately work after you buy through a breakout point. Had continuation the next day, was selling into strength there, and then let me get rid of this. Thursday, Friday, low volume pullbacks, kind of flagging out through here, double inside day. So I put this on the breakout watch list again. And then on Monday, we got going and really got out another 10% from Friday's close. So I was like, all right, here we go. I'm glad I kept most of my position. This was a larger position size. 10% of my account was on this trade. Took some off into there, took some off into there. And then this was just the most ridiculous, like 3 candles here, because we had the Fed meeting on Wednesday. We dropped 13% from the open price, and I think it was down 15% at one point from the close from the previous day. Yeah, 14%. Hit my stop. I had my stop around 26.17 through here. So it hit my stop at the low of like this flagpole. And then I was like, all right, I'm glad I got stopped out because it dropped another 5%. But then it dropped to the 20-day moving average. Boom, instantly someone got in, pushed us all the way back up to the 8-day exponential moving average. And I'm still like, okay, this still kind of looks ugly. Maybe it needs to flag out. No, the next day from the close, it shoots up 20. And I'm like, you have to get stopped out on this move. You don't want to be holding all the way down unless everything else is working for you and just one name is pulling it back. Everything was pulling back against me. I had to be protective of my capital, and I got stopped out, and then it ran for 20%. But look at this, it ran for 20%, and then from the high, it closed down 13% from that moment, and then on Friday, we closed even 21% from the high point here. So up 20%, down 21%, and when you're coming down, that 21 is even more aggressive than the way up. So really tricky environment with this one. I'm glad I squeezed out some profit. What did I make on that one again? 8.5%, $200. I'll take that for something this sloppy. All right, let's do TEN. This was a very large position size that I put on because I found a really nice area that I could drill in. Actually, let me jump back here. So this is a high type flag. It jumped like 300%. No, not this name, sorry. 117%, and then pulled back 11%. So 110, down 11, flagged out nicely. Had this fake breakout that I was not involved in. And then on this day right here, June 14th, that's when I sized up really large in this position because if I zoom out here, you can see how quiet it got through here. So this is the day that I got in. I got in with a break over 2080. Where was that? Yeah, it was like right at the end of the day, right through this range. See how nice and quiet it got? I got in at 2080 and then put my stop just below this area's low at like 2065. So I took 0.7% of a risk on it, saying like, okay, if this gets going, it's going to get going right away. If it doesn't, I want to get out right away, 1% stop, because it was a little bit early in the flag still. Ideally, you let this flag out a little bit more before turning up. Thankfully, I had large position size. Next day, it immediately starts working, up 5% or so. Ran all the way 7%, really. I took maybe 30% or so into strength, sold a little bit more on this inside day on Wednesday, kept the entire position on Thursday, and then look at this on Friday. It hit my stop loss, which I put to my entry point, and I was able to avoid this full sell-off here, down 8.7% just today on Friday. So I was able to make this a winning trade, even though it was only 2.2%. Even though it was only 2.2%, because I had such a large position size on, because I had such a small stop loss, 0.7%. It was one of my larger winning, $100 on the week. Should have been more, but I mean, you play what the market gives you. And finally, we'll do PLTR. This is one that I put on again. I've tried this trade 3 times now. 3rd time is the charm. Hopefully, we'll see. It was a 2020 winner. Pulled back. I've talked about this so many times, so I don't want to spend too much time on here. But built out a base here, undercut that, and started ripping higher, up 40%, 45%. through here above the 50-day moving average and then flagged out. I bought on this day, got stopped out here, bought on this day, immediately reversed, got stopped out. And then again on Friday, I bought again. So I'm taking these small losses, and every time I lose, I bring my position size lower and lower because I want to, when I'm trading bad, when I'm trading poorly, I want to be smaller and smaller with my position size. And then today, it set a new high since the base, and then pulled back, and now we'll see where that's going. But we're above this volume shelf, we're above the key moving averages. The 50-day moving average is starting to turn up. If we can just get going a little bit, this is a name where I think we'll see a lot of people flock to. All right, so that's going to be the trading recap from June 14th to June 18th. Again, 100% transparency, was not my best trading week. A lot of kind of mental lapses on losses, not quick enough to move my stops to entry, take more profit than I should have, or I should have taken more profit as stocks were showing strength. Down $1,200 on the week, down 2.8% on the account. So if you enjoy this transparency, check out my other videos when I was finding winners. We'll get right back there once the market firms up. But until then, we're trading defensively, trading with strict risk management. It's not flashy, but we live until we keep our account alive until the trend gets smooth, until we can be aggressive with our winners. Follow me on StockTwits, Twitter, TikTok, Facebook, and Instagram. Subscribe to the channel, like the video, and I'll see you guys on Sunday for the breakout watch list for next week. Take care.